September was the biggest month the dividend growth income portfolio has ever had. We smashed past last year's totals and collected a record amount of dividends. I'm Nick and this is the Dividend Growth Income channel. In today's video, I'll walk you through every stock I bought and every dividend I collected in September of 2025. That snowball is really starting to roll and I can't wait to show you where things stand. But first, this video is for educational and entertainment purposes only and should not be taken as financial advice. Dividend growth investing is not a get-rich-quick scheme and there are no guarantees of returns. Investing in the stock market involves risk, including the potential loss of principal. I am not a financial advisor. I am simply sharing my own personal journey as a dividend growth investor. If in doubt, always seek help from a licensed financial advisor. Now, before we dive into the numbers, just a quick reminder, this is a 3-year-old portfolio built with consistent monthly contributions and a focus on quality. I opened it at Fidelity when I started this channel so we could follow its growth together in real time. I'm not chasing high yields or swinging for the fences. This is about building sustainable growing income and wealth over time. A few days ago, I released a full 3-year portfolio review, and if you missed that, I've linked it in the description so you can see how we got here and what's driving today's results. So let's start with the contributions. I track all the money going into this account here in this spreadsheet because it keeps me accountable and gives me a goal to aim for. This year, I have been contributing less than I did the last 2 years since I have been prioritizing other accounts such as my 401k, Roth IRA, and HSA. I talked about this more in my 3-year portfolio wrap video, but the short version is this. My goal is to get back to contributing $1,000 per month once we get into 2026. But even with the smaller contributions this year, I'm still adding consistently. In September, I invested $600 into the dividend growth income portfolio. Here is how that money went to work. On September 8th, I put $300 into my 3 core ETFs, SCHD, VYM, and VOO. These ETFs have been in the portfolio since day one, and they're still my largest positions. Think of ETFs as buying into a strategy, a basket of stocks based on a rules-based approach, for just a few pennies in fees. So I'm very pro ETF, especially for newer investors who want instant diversification. I bought $100 of each, which came out to 3.65 shares of SCHD, 0.716 shares of VYM, and 0.0167 shares of VOO. And yes, the fractional shares make this whole process possible. It's a total game changer for small dollar investors. Then on September 15th, I moved another $300 into the account and bought some individual dividend growth stocks where I saw opportunity to increase my positions. First, I picked up $100 of automatic data processing, or ADP, which added 0.34 shares. ADP isn't super cheap, but it's at a lower end of a reasonable valuation. This is a dividend king with consistent double-digit dividend growth and a rock-solid balance sheet, so I'm happy to keep adding when it's reasonably priced, and it finally is becoming reasonably priced. Next, I added $100 to Mid-America Apartment Communities, ticker MAA. It's a high-quality apartment REIT, been beaten down over the last year. I like adding here because it lets me collect more shares at a better starting yield, currently over 4.3%. MAA owns apartments in the growing Sunbelt markets in Texas, Florida, and North Carolina, markets I'd love to own real estate in personally. And this is a much more hands-off way to do just that. No landlord duty, no maintenance. That $100 added 0.704 shares to my position. And then finally, I put $100 into United Health, ticker UNH, added about 2.87 shares to the portfolio. It's been one of my tougher positions. It's easily my worst performer so far, but I am still comfortable holding it. I see it as the riskiest of my core dividend growth stocks, but there are signs of a turnaround starting to show. I'm willing to stick with it, and if the valuation keeps easing a bit, I'm going to likely keep averaging in. And that's it for my September buys. I did sell a couple stocks this month and just rolled that into money back into mostly the ETFs I already own. Nothing new was added. I'm going to cover that in more detail in a video coming out next week. One of the names I let go of, I'll tell you now, was Starbucks, ticker SBUX. I've already talked about this one in a prior video. It got zero algorithm love, so I'll leave a link in the description if you want a preview of my reasoning. I did take a little profit on the sale. There's never anything wrong with doing that, but the main goal here was to consolidate positions and keep the portfolio tighter and more focused. Speaking of coming videos, make sure you are subscribed and have notifications on because YouTube is not exactly in love with my channel right now, and I don't want you to miss what's coming next. There's lots more to come. I'm done traveling for a while. Now that I'm back home, I can finally get consistent again. I plan to have a productive stretch of videos between now and April, at least once a week, Sometimes we'll get 2. And travel can really mess with my ability to crank content out since I work full-time and I have the dad responsibilities. But for the next several months, I am all in. September was the single biggest month of dividends this portfolio has ever seen. Here is the full breakdown. We kicked off the month on September 2nd with Aflac, ticker AFL, paying us $6.76. And Kroger, ticker KR, paying $8.72. A nice way to start the month with some steady cash flow. Then on the 10th, we had a big hitter with Chevron, ticker CVX. It paid us $24.04. And Snap-on added another $8.89. A couple days later, on the 12th, Amgen, ticker AMGN, paid $10.12. And then on the 15th, we had a nice cluster of payments. Agri Realty, ticker ADC, paid $5.08. Main Street Capital dropped $6.82. Next year, Energy, ticker NEE, sent us $12.99. Right after that, McDonald's paid us $10.33. That's a company I always love to get paid by. And on the 18th, Home Depot followed with $8.47. September 23rd was another busy payday. BlackRock dropped $7.38. United Healthcare, ticker UNH, paid $8.84. And my Vanguard High Dividend ETF, VYM, was one of the biggest payers of the month at $24.67. On the 26th, Lockheed Martin, ticker LMT, sent over $10.67. Waste Management paid $5.60. I always love these boring businesses quietly putting cash in my pocket. Then we wrapped up the month strong with the 29th. SCHD came through with the largest single payout of the month, probably ever in the account, $35.40. That's why SCHD is a core holding in my portfolio. Main Street paid again with their quarterly special dividend. This is on top of the regular monthly dividend with another $8.05. And then the last day of the month, Broadcom paid $4.46. To finish out was an incredible month of dividends for this account. All told, September brought in $207, a brand new record for the dividend growth income portfolio. To put that in perspective, last September we collected $138, which at the time was a big jump from September 2023, where we made just under $60. And way back in September 2022, the first month of the portfolio that has collected a few pennies, probably from SCHD. This is the power of consistency and compounding on full display. And here's the best part. Every single penny of this $270 was reinvested right back into the companies that paid it thanks to DRIP. It's like automatically adding another $200 of fresh capital into the portfolio without me lifting a finger. Let's take a look at how the account performed over September. We started the month with an account value of $47,177. And after adding $600 and making the purchases I talked about earlier, plus receiving $207.29 in dividends, the portfolio finished at $48,177.48. Performance-wise, it's about flat, up just 0.84%, or roughly $400 between unrealized gains and dividends, but I'll take it. On the income side, we began September with a forward annual income of $1,282.22. So between the $600 in purchases, $200 in dividends, and that Vici dividend raise, that climbed by just over $30 to $1,312.96. So we're steadily moving closer to our goals on all fronts. Now, we didn't beat the S&P 500 this time around, but that is fine. I've said before, my 401k is fully in the S&P 500. I keep a good chunk of my Roth IRA in it as well. It's my largest single investment. This account here is designed to generate dividend income, growing dividend income, not necessarily to outperform the market, though total return still matters. Historically, S&P has done about 9 to 10% annually. Right now, this portfolio is tracking around 8% per year. And after 3 years, we're up over 25% overall. So I think it's important to be transparent that while the dividend growth income portfolio may or may not beat the market, the goal is to stay close while producing a reliable and growing stream of income. We also had a dividend raise in September from Vici Properties, as I just mentioned. On September 4th, they raised the dividend from 43.25 cents to 45 cents per share. It's about a 4% raise. It marks the 6th consecutive year Vici has grown its dividend. Not a massive bump, but steady and exactly what you want to see from a REIT like this that's yielding over 5%. So it's consistent, reliable growth that compounds over time. Now let's take a quick look at what October has in store for the portfolio. Right now we're set to receive payments from 9 different dividend payers. Based on current projections, we should collect about $99.93 in dividends for the month. So right at the edge of $100 for the first time in the January, April, July, October cycle. I'm really hoping we get that little push just to make that happen. I think that would be cool. Our forward annual income at this point sits around $1,313. Also pretty close to what we'll expect for all of 2025 in total dividends. There's some big names paying in October, including two of my favorite REITs, that's Vici Properties and Mid-America Apartment Communities, both stocks we've talked about in this video. Both long-term holds for me, and excited to keep growing these positions as we head into Q4. And it's hard to believe we're already coming to the end of 2025. All right, so now I'm showing you my holdings in the fund, sorted by weight. At the top, you'll see the three ETFs, VYM, SCHD, and VYO. VYM is my largest position. I've talked about this before, but aside from reinvested dividends, I've always split my ETF buys equally between VYM and SCHD. VYM has just outperformed SCHD over the last 3 years, though not when you look strictly at dividend growth. SCHD has been stronger on that front. You'll also notice a solid position in Broadcom, ticker AVGO, there towards the top, which has grown itself into a top holding thanks to a 263% gain. It's definitely one I should have bought more of early on. Hindsight's 2020. We're due for a full video breaking down these positions one by one so I can share exactly how I see them right now. That will be coming soon, I promise. I do have a couple other videos in the queue first, however, so make sure you're subscribed so you don't miss that. Leave a comment and let me know your dividend income for September, or drop a stock you think I ought to cover in October that our viewers might benefit from. And if you want to see how long I project it's going to take to reach this portfolio's ultimate goal of $2,000 per month in dividends, go ahead and check out this next video where I break down the numbers. It's a little bit sobering, but remember, we're playing the long game. Thanks for watching, and until next time, keep investing. Not financial advice.